So you might have heard the saying, a picture is worth 1,000 words. Well, a meme is worth 1,000,000, or in this case, many millions. What an absolute classic here. How to grow your portfolio. Wait, I mean, hard to argue with that. I saw this meme post from James the Goat Stevenson over on X, along with a quote from Warren Buffett, who once said, "The stock market is a device for transferring money from the impatient to the patient." And in completely unrelated matters, I just briefly wanted to share this quote from Brad Gerstner, who says that Tesla FSD transforms the driving experience way more than I first thought possible. And he continues, "I suspect the pricing umbrella and willingness to pay will be very high once people really start using it." Translation, Brad believes that there's going to be a huge amount of interest in Tesla FSD, and Tesla's going to make a fuckload of money on Tesla FSD in the future. But of course, in the future means that investors today will need to be patient. And now back to the great Warren Buffett, who has some more thoughts on a combination of patience and the intellectual and emotional fortitude required to own stocks in great companies over time. By the way, I am going somewhere with this, so stay tuned.
You shouldn't buy stocks unless you expect, in my view, you expect to hold them for a very extended period, and you are prepared financially and psychologically to hold them the same way you would hold a farm and never look at a quote and never pay it. You don't need to pay attention to them. I mean, the main thing to do, and you're not going to pick the bottom, and nobody else can pick it for you or anything of the sort. You've got to be prepared to, when you buy a stock, to have it go down 50% or more and be comfortable with it as long as you're comfortable with the holding. And I pointed out, I think a year, maybe 2 years ago in the annual report, just the one before this most recent one, I pointed out that there have been 3 times in Berkshire's history when the price of Berkshire stock went down 50%. 3 different times. Now, if you owed it on borrowed money, you could have been cleaned out. There wasn't anything wrong with Berkshire when those 3 times occurred, but
this is a critically important observation. There wasn't anything wrong with Berkshire, yet the value of Berkshire cut in half or more. I remind you guys and girls of another quote. Over the short term, the stock market is a voting machine. Sentiment, emotions, feelings. Over the long term, it's a weighing machine, capturing actual substance and value. Those who can see through the noise often take advantage of massive opportunities when sentiment shifts highly negative. If the underlying company itself, there's nothing wrong with it, but the stock's on sale, it's half price or even cheaper.
If you're going to look at the price of the stock and think that you have to act because it's doing this or that, or somebody else tells you, well, how can you stay with that when something else is going up or anything? You've got to be in the right psychological position. And frankly, some people are not really careful. Some people are more subject to fear than others. It's like the virus. It strikes some people with much greater ferocity than others. And fear is something I really never felt financially. But I don't think Charlie's felt it either. But
just wanted to share a few thoughts on fear because I really think I've boiled this down quite succinctly. In some people, fear induces brain damage. Some people, when they become fearful, simultaneously become abso-fucking-lutely retarded. I mean this. It's not like some derogatory throwaway statement. I actually mean this. Some people, when they're scared, their brain switches off and they become a fucking moron and do absolutely brain-dead things. Like, for example, just hypothetically, imagine that Tesla stock was near $100 a share a couple of years ago, and that's the time you decided to panic sell. Not because there was anything wrong with the company, but because the stock had collapsed about 75%. And instead of thinking rationally, holy shit, nothing's wrong with the company, this is an incredible buying opportunity, you thought, oh my God, it's the end of the world, it's going to go to $3 per share, better sell now. Of course, that didn't actually happen. There's no real-world examples of that occurring, but that's one example of fear-induced brain damage. And this is not something that you can fix. If you're susceptible to fear-induced brain damage, I don't think that this is something you can change. It seems to be built into your hardware or software. I mean, a few years ago during the scamdemic, a lot of people were suffering from fear-induced brain damage. I was not among them. I do have receipts. I'm sure you guys mostly all seen them. I'm on the record back in April 2020 denouncing the futile, fascist and inhumane lockdowns as unnecessary and more harmful than the supposed virus itself. I talked about suicides, deaths of desperation, people having social isolation. I called this April. I mean, hello. People went absolutely berserk when I said this, by the way. But I was right. I was not currently suffering from fear-induced brain damage. Same guy on X, a couple of months later. This virus has been a large-scale public IQ test. Another one from May 2022, a couple of years later. Same guy writes, I think slightly sarcastically, trying to make a point. I am suffering from fear-induced brain damage. Please tell me what to think, believe, and do. I will comply. Thanks, a concerned sheep. Almost as if to suggest that people who are suffering from fear-induced brain damage will often, out of fear and panic, outsource their decision-making to somebody else. And tell me what to do. I'm scared. Just give me some peace of mind. I'll just do whatever you tell me so I stop feeling scared. So when it comes to investing, one needs to be immune to suffering from fear-induced brain damage, from seeking the guidance, the wisdom of a perceived authoritative figure. Instead, they've got to think for themselves and make their own decisions. Not everyone's cut out for long-term investing. Warren Buffett's making a very important point here. Some people just don't have what it takes.
Some people can handle it psychologically. If you can't handle it psychologically, then you really shouldn't own stocks because you're going to buy and sell them at the wrong time. And you should not count on somebody else telling you this. You should do something you understand yourself. If you don't understand it yourself, you're going to be affected by the next person you talk to. And so you should be in a position to hold. And I don't know whether today is a great day to buy stocks. I know it will work out over 20 or 30 years. I don't know whether it'll work out over 2 years at all. I have no idea whether you'll be ahead or behind.
Did you guys notice, by the way, this was recorded during the scamdemic early on. Fancy that. Spoiler alert, it was a great day to buy. But you notice he talked about, didn't know whether it would work out over a very short time frame, a few years, but it will work out over literally 20 or 30 years. You see, Warren Buffett actually has credibility because over multiple decades, he has actually compounded and compounded and compounded his capital at an astronomical rate. And I think time horizon is one of the biggest separating factors from people who make a little bit of chump change trading in and out of stocks versus people who create substantial wealth over time. How many investors do you hear talking about a holding period of 20 to 30 years versus a few quarters, a few years? Not many. Maybe that's why there's not many investors who've achieved results like Warren Buffett. Patience, immunity to fear-induced brain damage, and a long-term investment horizon, all necessary pieces of the puzzle to creating substantial wealth over time through investing. Once again, we revisit the opening meme, the book on how to grow your portfolio. One word, wait. Another factor we heard from Warren is do not outsource your thinking. I saw this great clip from Jacob, who posted this. There is still insane levels of retardation when it comes to experts covering Tesla. Check this out. Now imagine for a moment that you're one of these people who prefers to outsource your thinking. And you watch these supposed experts sharing their alleged expert opinions on Tesla and make decisions as opposed to doing your own homework. I wonder how this would end. This is an all-timer. This actually happened. I mean, it's unbelievable.
You know, in addition to humanoid robots, Musk also said that he wanted to focus on automated vehicles too. And
right, and how they're driving themselves out of the
right,
plant.
the Robotaxi,
and sort of thing
there
like
that. I think there are actually other vehicle manufacturers whose vehicles can drive out of the plant. But you know, they probably don't talk about it as much because they don't want to bump up their stock. I don't know why.
Or they don't think it's a big deal.
Maybe that's it, yeah.
This has got to truly be one of the most retarded things I've ever heard anybody say about Tesla. This dude here, meekly sitting in his chair, contributing to the conversation, just randomly asserts that he believes that other automotive manufacturers also have vehicles that could and or are autonomously driving themselves off the production line to the logistics area for shipping, but said companies don't actually mention or even demonstrate this fact because maybe they don't want to pump their stock. Why would you say this? Got to be one of the dumbest things I've ever heard regarding Tesla and its so-called competition. Brother! Now, they say there's two types of people in the world. Those who bar up when they see a spreadsheet and those who fall asleep. Regardless of which type of person you are, just wanted to share this. Bit of an insight into what patience when it comes to investing can look like. We have 10 years of history of me purchasing and holding Tesla stock. I've never sold a share of Tesla stock. My average purchase price in 2016 was $14 a share. The following year, 16, then 18, then 17. 10 years of buying history. And we've got 10 years categorized profit loss on shares purchased by each year. Now, you might notice a few things here. First of all, between 2016, 17, 18, and 19, my average buying price on Tesla stock basically the same, meaning the stock went abso-fucking-lutely nowhere. You know what didn't go nowhere? The company. They made incredible progress. Model 3 launches, Model Y launches, huge progress on autonomy, massive scale, total domination. Obvious they've won the decade, yet stock goes nowhere. This was truly a gift from the flying spaghetti monster. But note, my profit loss on the shares purchased all the way back in 2016, that's 10 years ago, roughly a 20 times increase. Not bad. 9 years ago, 16.5 times. In 2018, 15 times. 2019, 15 times. 2020, a mere 2.5 times return. Now, from 2021 until 2025, as I record this, you might notice something again, a repeating pattern. Tesla stock essentially having gone nowhere over, fancy fucking that, another half-decade period. History does not repeat, but it sure does rhyme. This time, instead of an average price of about $16 a share, I've been buying Tesla stock for about $2.50 per share. And you'll note the returns on the shares purchased in the last 5 years, which is basically an instant with a long-term investment horizon. I mean, they basically round down to a 0% return, all right? 7%, is that it? 15%, 32%? Bruh. But it's important to remind you folks that there was a time when my purchases in 2016, 17, 18, and 19 had returns that actually were even worse than this, many of them negative. There are two things that are very true of this data, a decade of buying and holding activity on Tesla. The further back in time I go on average, the bigger the profit. Additionally, we've seen a pattern repeat twice, half-decade periods where the stock basically went nowhere. Of course, I'm not suggesting this will happen again. I mean, in totally unrelated matters, when's Tesla launching Robotaxis again? Oh, that's right, in Austin in June. Totally unrelated, of course. But I did just want to show you guys some data, some numbers, demonstrating what a decade of buy and hold can look like on a single asset. Now, tomorrow this could look very different, right? But I've always thought in decades when it comes to investing. This is why my Tesla valuation model, published on Patreon first back in 2021, always spanned a 10-year period of time. I don't care about tomorrow, next quarter, next year. I don't give a fuck, bro. I'm thinking 10 plus years. And the next decade is going to be the most exciting in Tesla's history, by far. Autonomy, scaling robotaxis, and the humanoid robot. And for what it's worth, I very much look forward to revisiting these numbers in 2035, at which point I still don't intend on having sold any Tesla stock. I mean, who knows? Maybe there's an emergency that I can't foresee, but I doubt it. At which point, I have a relatively strong hunch that the Tesla stock I'll have then owned for 20 years, purchased back in 2016, may show a slightly higher than almost 20 times return. The Tesla shares purchased between 21 and 25 may also look a little bit more like the stuff that I bought between 2016 and 2019. And it's also entirely possible that Tesla may still in fact be the only stock I own at that point in time. I'm open to other opportunities though, don't get me wrong. But so far, over a decade, I asked myself two questions. Does Tesla look like a great deal today with a long-term view? The answer's always been yes. And am I aware of a better risk-adjusted opportunity? And the answer's always been no. That might change. But for 10 years, the answers to both of those questions haven't budged. Anyway, see you guys in another 10 and 20 years for some updates on the buy and hodl Tesla strategy. Want more content? Early access? A bunch of perks? Click the links in the pinned comment. AG1 is awesome. I've been taking it daily now for more than 3 years. It's a great way to fill in nutritional gaps. It's packed full of vitamins, minerals, and whole food source nutrients, plus has prebiotics, probiotics, and adaptogens to improve gut health, regularity, and help your body handle stress. I'm always looking for an edge to help me feel and perform my best, which is why I haven't missed a day of AG1 for more than 3 years. Just try it and see how you feel. Click the link in the pinned comment or head to drinkag1.com/SMR and get yourself a free 1-year supply of vitamin D3 plus K2 and 5 travel packs.